So out-of-pocket costs paid by us, well, Medicare beneficiaries, us. So you have to pay premiums. So Part B premiums are paid to Medicare. Private insurance premiums for Part D, okay, so you pay that to a private company, and for Medicare Advantage. Other out-of-pocket expenses are deductibles, the portion of bills not paid by Medicare and services not covered by Medicare. If you go to the monthly premiums, Part A, which is paid to Medicare, and this is where Social Security and Medicare kind of come together. So if you have 10 years of contributions into the Social Security system, well, your Part A premium is no charge. But if you don't have 10 years of work in the system, then you're going to pay a premium for Part A. So if you're 30 to 39 quarters of credited services with Social Security, you're going to pay $252 a month, and then $458, and those are inflation adjusted. So next year, those numbers will be higher. Part B is paid to Medicare. Now that's $144.60 in 2020. When I first started doing this presentation 8 years ago, Part B's premium was like $72.30 or $72.40. So just to give you an idea, in the 8 years I've been doing this, this is basically doubled. And incidentally, this is a subsidized cost. The federal government, this is roughly 20% of what the real charge is. So the federal government picks up 80% of this cost. So if you want to multiply the 144 by 5, it would give you an idea of what the full cost would be. The 144, though, is paid by constituents, plus an income-related monthly adjustment. That's called the IRMA, and a lot of people are not familiar with this. So essentially, if you make too much money in retirement, they're going to charge you a surcharge for your Part B coverage and your Part D, as in David, coverage. So you see Part D paid to private insurer, varies with plan, plus an income-related monthly adjustment there. Well, when do those IRMAs, IRMAA, come into effect? Well, let me show you. This is the chart of how they figure out whether or not the income-related monthly adjustment is applicable to you. So let's pick on MAGI as modified adjusted gross income, joint filers. Let's look at that 174,001 to 218. If you and your wife or you and your husband are at that threshold in retirement, well, not only do you pay the 144.60, but you get to pay an extra $57.80 on B. On D, I used a $40 number for the plan here, but you get to pay another $12.20. So instead of it being basically $184, you pay $254 per person. How do they determine the IRMA? Well, we're sitting here in 2020. They're looking at what your modified adjusted gross income was in 2018. So they look back 2 years. So in 2021, they're going to look back and see what you earned in 2019. In 2022, they're going to look back to see what you earned in 2020, this year. And the IRMA can be adjusted, so it can fall off. I can also share with you the IRMA can be challenged. So if due to this whole COVID craziness, somebody lost their job and you don't have nearly the income that you had, that is a legitimate, and it's another form, to challenge the IRMA. You could send that in to Social Security and they could drop the surcharge. So just be aware of that. But the IRMA is something that a lot of people aren't aware of. It's another, well, it's a tax that you get charged if you basically make too much money in retirement. That's basically how it works.